for your fix and flip program, could you just give us a broad overview of how it works and what some of the numbers are like?
Sure. So we lend 100% of the purchase, 100% of the rehab, up to 70% of the after repair value. The way that we focus on that is then how you qualify for that is a couple different things. First of all, we do not require experience. If you have zero experience or 0 to 3 experience, we will limit your ARV up to 65%. If you have experience, then you qualify for the 70. There's no down payment required on the property so long as all of the numbers are less than the 70% ARV. If we wind up going above 70% ARV, you do have the option of bringing cash to the table, of course. So the only out-of-pocket cost, as long as the ARV works, is your closing cost, your third-party cost, and that's it. What do we look at? What do we require? Well, we definitely look at your credit, just like everybody else does. The only difference between us and some of the other lenders out there is that we will take the higher of 2 scores if you are a borrower, co-borrower combination. Income-wise, we take a look at real income. We definitely require tax returns, W-2s, pay stubs, and we'll take a look at the total income that you're looking at. We look at income and cash flow in the same regard. So mainly what we're looking at is that we know that every investor out there is trying to report zero on their taxes, okay? And that's between you and the IRS. For us, what we want to validate is cash flow. So when we look at your bank statements and we require to look at assets, how much liquidity that you have, we also look at the cash flow that you are showing as well. So it's more looking at validation of your top line on your tax returns versus the bottom line.
So in terms of income, let's say I'm a new real estate investor. This is my first venture. Are you looking at whether I have a full-time job that's generating income, or do you have scenarios where investors have other types of income that make them qualify?
The majority of our investors have second jobs or a primary job earning W-2 income. I would say to you, because we don't require experience, that is a typical scenario. You're getting a W-2 wage earner, and we take a look at what their income is. We do take a look at your income compared to your outgoing expenses, and although we don't have the hard and fast DTIs that the conventional lender may have, we will take a look at DTI and say, can you afford this loan? Does it make sense?
So let's say I don't have a job, but I'm a real estate investor and I've got a bunch of rental properties that are making income. That obviously qualifies, right?
That's a great question.
Cash flow.
It's a great question, and it's a great question because I think that the initial conversations with our salespeople, sometimes the investor gets paralyzed by saying, "Well, we take a look at your income and your cash flow situation," and they say, "Well, nobody asked me for taxes. Okay, why are you asking me to see my taxes? I write off everything I possibly can," and we understand that. At the end of the day, all we want to know is that you have the cash flow that you can support paying for our loan.
That means I do have to make interest payments during the loan term, right?
That's correct.
Okay. So you're looking at the income of the borrower because you want to make sure that they have enough money to make those interest payments. But then you also mention liquidity. So what about cash reserves? How much money do you expect me to have in order for me to qualify for a particular project funding?
Sure. So let's take a look at assets, and we'll take back a look at the income as well. So asset-wise, what we're going to make sure is that you effectively have your closing cost available. You have your reserves. We require 3 months worth of reserves paid at closing, okay? And then, and for ground up, we require 6 months reserves. So as long as you have all of your closing costs, third party and RFG costs, you're covered on that regard. We also require at least 10 to 15%, okay, of your rehab budget in reserves, cash in your bank account.
So we've got the reserves based on the rehab budget. So let's say the rehab budget's I don't know,
$100,000. We're requiring that you have $15,000 in cash aside from, what's required at closing.
Okay, and that doesn't have to go into an escrow account. That could you just trust me that I'm going to have those funds in my bank account.
We trust you that you're going to have that money available. We'll also look at other investment accounts that you have as well, but we'll only take a certain percentage of what you may have in your 401k or IRA, stock accounts and stuff like that.
Okay. So let's go back to the other costs. Now, if let's say the ARV requirements met, I don't have to bring any cash to make that work, and you're going to fund 100%. So specifically, how much money do I need to bring? I have third-party closing costs, which could range depending on. I mean, we're talking about a few $1,000s
So
for that,
everything's
right?
based on the percentage of your loan. So there's the percentage points that you're paying as a result of paying the fees associated with our loan. There's some, minor processing, underwriting type of costs associated with that. And then, your third party costs, your title insurance, your, an inspection, appraisal fees, stuff like that. You have to cover those costs as well. Of course, any taxes that are due, associated with the loan as well.
Okay. And then now you mentioned RFG costs. Now that's Rehab Financial Group costs. Now are you talking specifically about origination points?
Origination points, any of the fees associated with it. Your origination points with us, depending upon whether you're a broker or investor, it range between 2 and 3 points.
Okay. So I have to have that cash up front. So there's no down payment. I just need to bring in that 2 to 4% of the loan amount as which are origination points at closing. So I have to have that money and then all the other third party closing costs.
Correct.
Okay, and then I have to have the reserves on the rehab budget as well.
That's correct. And that's really the power of our product is that if it is our opinion that if you can really find those properties that have the 70% ARV or less, that puts you in a really strong position for success, correct? So the fact is that along with the fact that we are checking all of those other variables gives us the comfort that you're going to be successful, we're going to be successful together, and ultimately we don't require any additional money at the closing table.